Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Intel. Should we run away based on the Q3 results, or is Intel a long-term play for our portfolios? Well, let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both the short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below. Definitely helps. And consider subscribing and hit that notification bell to like your daily stock reviews and recommendations from an unbiased source. So let's get right into it. So Intel Corporation designs, manufactures, and sells essential technologies for the cloud, smart and connected devices for retail, industrial, and consumer uses worldwide. It offers platform products such as central processing units and chipsets, and system on chips and multi-chip packages, and non-platform or adjacent products comprising accelerators, boards and systems, connectivity products, memory and storage products. The company also provides an Internet of Things products, including high-performance compute solutions for targeted verticals and embedded applications, and computer vision and machine learning based sensing, data analysis, localization, mapping, and drive and policy technology. Now, it serves original equipment manufacturers, original design manufacturers, and cloud service providers. Intel Corporation has a strategic partnership with the MILA to develop and apply advances in artificial intelligence methods for enhancing the search in the space for drugs. Now, let's go ahead and look at some of the news of the company. First off, the stock plunged last Friday following its third quarter earnings, and I will get into the specific numbers in a few. But Intel announced the other day the 12th gen Alder Lake CPUs. It's their long 14 nanometer nightmare is over, they said. And to bring everybody up to speed about nanometers, its competitors are making 7 nanometer chips. I will also get into that in a few. So Intel also announced that they are launching new PC chips. Says a U.S. supercomputer will double expected speeds. Now, Intel Corp on Wednesday introduced a new, faster family of processors chips for personal computers, and said that the supercomputer it is helping the U.S. government to build will reach double previously expected speeds. For the government, that's a great thing. So this is good news for Intel. So let's go ahead and look at some of the fundamentals of the company real quick. Now, the stock is currently trading around $48.41 a share, with a market capitalization of about $197 billion. Now, the estimated revenues for 2021 will be approximately $73.5 billion, declining over the past few quarters, and I will get into that. And it should have a year-end earnings of around $18.47 billion. Now, the forecasted revenues should be relatively flat growth over the next year, with slightly increasing in 2023. Now, the forecasted revenues for 2023 should be approximately $76.5 billion, with around $14 billion in earnings. So yes, Intel is expected to have a period of stagflation. Now, looking at this year specifically, for the first 9 months of 2021, the revenues of $58.5 billion represented about a 1% increase from the same period in 2020. Over that time, the net income rose about 1% to just over $15.2 billion. Now, however, amid this slow growth, the third quarter numbers point to a 5% year-over-year gain in revenue and a 60% gain in net income over that same period. Unfortunately, though, most of that net income gain came from equity investments. Now, also, Intel's 2021 revenue forecast predicts yearly non-GAAP revenue of $73.5 billion, a 5% drop from 2020. Even though the analysts expected lower numbers given the temporary revenue bump from the 2020 pandemic, the news disappointed investors, and as you can see here, the stock plummeted about 12% on that news. And also, investors didn't like the news that gross margins will come in below current levels. Now, looking at the financial health of Intel. Now, Intel's short-term assets of $61 billion exceed both its short-term liabilities of $29 billion and its long-term liabilities of $48 billion. And this debt-to-equity ratio, though, of 44.7% is considered high. Good news is that shareholders haven't been meaningfully diluted in the past year. Now, let's look at some of the analysis real quick, at the valuation analysis, because Intel is in the semiconductors and semiconductor equipment industry, industry and has positive earnings, the PEG and PE ratios are the most appropriate valuation measures. Now, the price to book ratio is excluded since it's likely underestimates the company's book value by overlooking hidden assets such as intellectual property. Now, the price to sales ratio is not as meaningful as the PE or the PEG ratio due to the company's positive earnings. Therefore, Intel seems expensive with a PEG value of 2.95 times above the semiconductors and semiconductor equipment industry's medium PEG of 1.81 times. However, though, the PE ratio is only about 9.33 times, 9 to 10 times, and that's among the lowest in the industry. Now, looking at the profitability analysis, Intel is one of the more profitable companies in the semiconductor and semiconductor equipment industry with a net margin of 26.89%. Its operating margin and net margin are among the strongest of any peer, while its gross margin is above the industry median. Looking at the dividend analysis, which is great for income investors out there, it pays an annual dividend of $1.39, which at its current stock price produces a yield of 2.89%, which is above both the semiconductor and semiconductor equipment industry average of 1.46% and the S&P index value of 1.44%. This is even more impressive in that few companies in the semiconductor equipment industry even pay a dividend. Now, looking at the growth rates analysis, which are not really growing right now, earnings growth at Intel outpaced revenue growth over the trailing 12 months. This is a trend that is not sustainable if profits are to continue to grow at this rate. Additionally, the average company in the semiconductors equipment industry was able to grow earnings at a faster rate than Intel. And then finally, looking at the financial strength analysis, it has a debt to total capital ratio of 30.9%, which is in line with the semiconductors and semiconductor equipment industry's norm. Now, the company's balance sheet shows that liquid assets are plentiful enough to service the current liabilities, like I said a few minutes ago, in the event that operating earnings are unable to. So let me bring back over here. So what do the analysts say about this? Now the analyst consensus right now is a hold. 4 say buy, 11 say hold, and 7 say sell. Their target price that they give is $53.48 a share, with a high estimate of $80 and a low estimate of $40 a share over the next 12 months. Going over a few of the analyst reports, the new Constructs report strongly recommends investors buy Intel with a very attractive rating. That means that they have superior upside potential with low downside risk. Now, the Street Quant ratings have Intel Corp as a buy. This is driven by a few notable strengths, which they believe should have a greater impact than any weaknesses they see, and should give investors a better performance opportunity than most stocks that they cover. Now, the company's strengths can be seen in a multitude of areas, such as its revenue growth, which I kind of disagree with that one, largely solid financial position, and reasonable debt levels by most measures, attractive valuation levels, which I agree with, expanding profit margins, and good cash flow from operations. Now, they feel that the strengths outweigh the fact that the company has had somewhat of a disappointing return on equity. Now, when I just read that, I disagree with the revenue growth because they are going through a slight decline in stagflation with revenues right now, but I completely agree with most of their statement. Now, moving on to the Forward Equity Research Report, recommendation summary forwards a buy recommendation on Intel as a result of their systematic analysis on the 3 basic characteristics that they look at. They look at earnings strength, relative valuation, and recent stock price movement. Now, the company has generated a negative trend in earnings per share over the past 5 quarters. However, while recent estimates for the company have been mixed, Intel has posted better than expected results. Now, based on operating earnings yield, the company is undervalued when compared to all the other companies they cover, and I agree with that. Share price changes over the past year indicates that Intel will perform in line with the market over the near term. I completely agree with that Ford's report. So my buy, hold, or sell recommendation on Intel, here are my thoughts. Now, looking at the gross margins again, Intel is investing in itself and will spend approximately $20 billion to build 2 new factories in Arizona. Those will compete with other companies like Taiwan Semiconductor and its rival, of course, AMD. Now, the competition with chips is building them smaller and smaller and smaller. Now, Intel has stumbled in the past few years to develop a chip smaller than 14 nanometers. When it released its 10 nanometer chip, rival AMD was already doing a 7 nanometer chip for years. But what's appealing to me about this stock right now is looking at the dividends. The annual payout is $1.39 a share, which yields approximately 2.8% of the current stock price, which is more than double the S&P 500's average of about 1.3. Now, the dividend has risen approximately 5% per year in recent years. It closely approximates the current increase in inflation based on the U.S. Bureau of Labor. Now, this could broaden Intel's appeal to income investors by providing some steady funds while we all wait for long-term gains. In addition, looking at its valuation with a PE ratio of 10 times seems fair to me while we wait for Intel to catch up to its rivals. Other companies in the sector are trading at 26 to 31 times earnings. Now, reviewing that third quarter earnings call, in March, Intel announced that it has a four-step strategy for a new area of innovation. CEO reiterated this plan, which focuses on the following: expanding the internal and external manufacturing, starting production of chips for other companies, and developing a world-class foundry, regaining process leadership and delivering leadership products in every category Intel competes in. Now, in the upcoming months, Intel will release new products that many investors and tech enthusiasts are excited about. Intel will be entering the discrete graphics card market with its Alchemist GPU, and the accelerator AI market with its Pana Vici GPU. Numerous products like consumer CPUs, data center CPUs, and are also in Intel's pipeline. Intel mentioned to its investors that original equipment manufacturers are focusing on higher margin items due to component shortages. This component shortage has caused Intel to report a slowdown in its PC-centric business and pushed its stock price down. Now, also check out what the insiders are doing. They're buying the stock right now. Insiders, including CEO Pat Gelsinger, which disclosed they bought a total of 2.5 million stocks recently. So some insiders made their first open market purchase of the stock ever, while others bought for the first time in years. It is nice to know that insiders like the stock. Now, going beyond these numbers and looking at the big picture of the future, this is where we go beyond the fundamentals with forward-looking vision. Now, knowing that Intel is investing in itself with those two factories, I believe Intel is poised for growth in the years to come through sharp gains in its chip performance. Also, its Internet of Things business turned a terrific performance with a record revenue of $1 billion in the third quarter. In this market segment, Intel is looking to capitalize on the diverse end market opportunities that it sees going forward, hence why the reasoning to ramp up investments to keep the bigger picture in mind. So based on all of that, I'm a long-term bull on Intel. My 12-month price target over the next year would put it around $55 to $60 a share. Now, do I expect Intel to perform spectacular over the next year or two? No. This is a long-term play over a 5 to 10-year time horizon. It is not a short-term growth stock, and yes, there will be meaningfully depressed cash flow going on. And as always, remember that. Step out of the fundamentals and technicals, and always look into the future and say to yourself, do I believe in the vision of a company and whether I believe that they're going to succeed? But be warned, just don't follow your gut, because even if you love the company, they have to have a solid foundation to move forward. So examine both. And that's Tony's tip of the day. So there you have it, folks. And as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell to like your daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks, ciao.